Hello, boys and girls. I'm finally back. Been a tough week. Probably should not have traded while on vacation because I didn't uh, manage them very well. So I'm down about 20% now, but pretty confident that it will go green in the next week or two. So let's look where we are. I think today is the top, or actually yesterday was the top, and the period of weakness starts now. The only question is how bearish will it be? Like at this point, there is no contest. This is a bull market, and it's the burden is on bears to step up and make equities drop. Other than that, things will continue to be bullish. There's no immediate reason to turn bearish. From a TA perspective, everything screams stop. Like there's a bunch of them, but I'll start with RSI. RSI is very overbought. Only a couple of times in the past 2 years, 3 years, we were above this level, and the only time we were above this level was the V recovery after the market crash in March 2020, and this is the only time it went above it. Then we have, what can I turn off? Let's turn off Bollinger Bands. So then we have McClellan oscillator. There's a bearish divergence here, price going higher and this going lower. Then we have, what else do we have? We have market breadth. This is now going into the red zone. So breadth has recovered, is now overbought as well. And as you can see, when it gets to the red area, we usually have pullbacks. And now breadth is overbought as well, so time to turn around. This is the polynomial regression bands I use for the liquidity thing, liquidator. And it's also, I set up this to kind of create a channel starting from here. As you can see, when we hit the top of the band, or sometimes we go above it, but this time I don't think we go above it immediately. But when we go above it, or when we go below it, it's kind of reversal time. And the only thing that needs to happen for a reversal to happen is to have an expiration. This was June, this was October, this was August, this was March. This is what was the quarterly expiration post March OPEX. So this was the end of March. And generally speaking, when we hit this, like this was February, the beginning of February, this was December, OPEX. And when we hit this kind of level, when we hit the upper band, it's time for a reversal. We haven't quite hit it yet, like it would be 445-ish. I don't think we go for it, but anything is possible at this moment. Uh, Never thought we would get to this kind of levels, but here we are. The buying has been incredible. Okay, so we can hide this one as well. And that's kind of it. Then going into detail, I think this is a fake breakout, like this was a fake breakdown, and we're gonna get back in this rising wedge pretty soon. And the target is to go to the lower trend line here. I don't think we get the big breakdown right now, although obviously it's possible. But for now, the expected move for me would be drop, maybe bounce here, and then drop, then go all the way to 420-ish. I'll give more reasoning on this in a second. So let's look at a few other things. Right now we have the June range. This is the June range. Sorry, this June low. We look here on the monthly. June has a huge monthly candle. Sorry, this was the weekly, the monthly. Huge monthly candle. We're up 5.92% this month already. And when we look at it on the lower time frame, we see that it fits pretty well with other previous ranges, like this 430 to 416. It happened a couple of times in the past as well. Then we have this one from 420, from 430 to almost where we are right now at 444 almost. And they are already established ranges. Like we played this in the past as well. We played it here, and I think like I said, I think this was the top for the move at around 444. Not excluding that we may retest it today on a last push, but I highly doubt we close today with a bullish green candle. I think we'll either get a red candle, or if it goes up, we get a big wick up and we close closer to 440 or even below 440 at the end of the day. Um, I also made a few levels based on this. Like if we were to go higher, next level is 457. And let's go back to the daily just to have a reference. So if we were to go higher uh, as a bull move after this OPEX pullback, then I would expect the next one will be 457, and even if that is broken, then 471. If we manage to break this trend line, then 400 is a big support, a huge support actually, and then 389. I don't think we'll. I mean, it's too early to talk about going lower. It's too early to talk about going higher. I think we may be range bound in this area, like we were consolidating lower, like the 390 to 420 consolidation. Now we might be looking at a while of just doing like this. We shall see. Again, it's too early to tell. Uh, the the amount of delta expiring this today is huge, and markets will need a while to settle down and see where it's going. Okay, aside from the June range, we also have the Q2 range, which is this one. Let me turn off June. So Q2 mid is 423, low is 403, and high is the same as the June one. And let's turn on the moving averages as well and zoom in a bit. It's still pushing Bollinger 2. Let's turn on the June range and let's look at some scenarios. So the minimum we will see on the pullback, the bare minimum, is a retest of the 20 MA here in green. Currently at 424.76, but give it a couple of days and it will probably continue. It will continue, not probably. And the most likely outcome is we get a pullback to 430. This is the bare minimum. I don't think we get this. I think we drop more, and that more is the 50 MA. I think we see at least a retest of the 50 MA. When I posted last Friday about expecting a 20 to 30 point pullback, that is still valid, but now we're starting from a much higher point. So still expect 20 to 30 points of pullback, but now it's from 443. So even 40 points is like this area here. So that would be a 100 MA tag, and likely that's happened around here. So 416, something like that, 415, 416. So again, this is kind of what I expect. We go for the Q2 mid at 424, then we bounce, or then we may bounce, and we see another rally towards the end of the quarter. This is going longer than that, but it will be very quick. Go here, then bounce, and by end of June we get a retest of the highs, and this will start setting up a range for us to play with in the future. So June range, I took that out, so Q2 range. June range here. Yeah. So I think this is our new playing field. The June range being a huge candle of 6%. I don't think we go higher anytime soon because all the bullish flows will be going away and all the bullish position will be going away. we are very vulnerable to a larger pullback moving forward. And for the market to go up, puts need to be bought as hedges. Even if those hedges are bought slowly to create support and not have a large pullback while doing so, it it will take a while for the buildup of Y to happen. So it's more difficult to go up in that time frame. And this could be a double top, and then we have a much bigger drop, and that's kind of it. Another thing to look out for is, I'll go to the lower time frame and turn off this for hour. So we have some short-term uptrends. The first one would be this one, and the second one would be like this. When this goes at 437, we get continuation down, and we should go to 423 relatively quickly. The fact that this is confluent with 423, the other trend line, I think makes it more likely that it will bounce here. So this is my main scenario with a bounce at 423. And if we get a bit of an overshoot, it's going to be 415. I doubt that because things are not bearish yet. We would need a negative catalyst for this to happen. But 423 is a reasonable target. And reminder that the 20 MA one is also likely. I don't think it will happen because the loss in delta is huge, but we shall see. So let's look at delta as well here. We have 25% of delta expiring, which is pretty big. And out of this, almost all of it is call delta. This is not, this is call delta as the percentage of total delta. So we have 25% of all delta expiring today, and that is almost 100% call delta. The put to call delta is 0.01, it's like 99% calls. And when we look at the delta profile, we can actually see this. All the blue here will be expiring today. Yes, all the blue here will be expiring today, and only this blue here will be expiring from puts. There's so few puts left that are in the money that it's kind of funny. And this will also change the OI profile. Uh, I'll be waiting to look at it tomorrow, and that's kind of it. When we look at, oh, actually, I wanted to show something else about how crazy this rally was. In the delta charts, my positioning indicators. Wait, this is no, that's fine. So my positioning indicators are relative. Each reading is relative to all other readings. So it's a For the example, this was the previous all-time high, which is now 75%, the positioning rating mean. And this was taken out by a large margin so that the previous 100% value is now the 75% value. For the average, the previous all-time high value is now the 91% value. I didn't think it was possible for it to go this high, but live and learn. And uh, I have some ideas of how to adjust for this and make this indicator much better in the future. I'll explain at a later time. Okay, now let's look at QQQ and the other indexes. So for QQQ, I didn't do that big of an in-depth analysis. What we should be seeing is this as a bare minimum. So this 343 area, so 340 between 340 and 345, and that will also keep the uptrend going. And it will be the 50 MA meetup as well. Or the more bearish version is with a bigger drop to 320 to 325. I don't think we see this one. It will be a huge move down. I think it's more likely that we will see 340 to 345. Then for IWM, this one is still going with horizontal ranges. Actually, let me show Q's delta as well. Again, all this blue stuff is expiring. For Q's, it's even bigger. It's 27% call delta, no, delta expiring, and 26% is calls. And OI wise, like the OI drop off is huge. 28% of all OI expires today. So yeah. Okay, then back to IWM. IWM is still working with horizontal ranges. We have a potential breakout here, but it's still in the rejection zone, so anything can happen. And because we expect the pullback here to start, it's more likely that will actually get a pullback, and we don't confirm the breakout yet. So something like this, maybe we retest the lows and then we go back up. We shall see. Um, Given that I expect a rotation to happen later in the month, uh, I think we only drop a bit on IWM. But anyway, from 187 to 180, if 180 doesn't hold, then 170 it is, and we go from there. I expect IWM to break out if the market continues to be bullish. So if uh, if the bull market continues, then I expect something like this, and then we break out and it actually goes to 200 plus. If the bear market resumes, I expect that we get that spring movement based on the week off model. So something like this. DIA. So DIA is an interesting spot. Also working mostly with horizontal levels. We have this range here that oops, that is still valid. We're still in the rejection zone, so we broke out a bit, but we're in the overshoot range. And this is the 50% level here in the dashed line. I think we get another retest of the 50% line. So we go down. We have this trend line here, which is also important. And we should be, again, if the bull market is here to stay, we should be bouncing here. We don't get a close below this. We wick below the trend line, then go back up, and it then goes back up. If the bear market resumes, we go back to low 300, 320s. IWM delta, you might think that IWM will be a bit bearish, but that's not the case. Even for IWM, we have actually 20% of delta that expires today is called delta. And it's visible here as well for OI and delta. This is the battle zone. So if IWM is bullish today, it will be a battle for 190, whether 190 closes in the above or below 190. And DIA is a bit strange because the raw data I'm getting is a bit strange as well. Let's look at the numbers. What the fuck? Is this accurate? I didn't look at it beforehand. 40%? 29% of OI expiring today. I guess, I don't know. No, it corrected. So it's 90%, and it's also mostly called delta for DIA. So all of them are overbought as fuck from a positioning perspective, and all the positive flows they've been getting and allowing for this rally will be going away as of today. That's kind of it for now. I wanted to do another week off in the idea that what Cem said yesterday about the bear market coming back, having the potential to come back in force after today. Let's do the funky week of the overlap like this. Yeah, this is shit quality. Let's this one, the UTAD. So we have a nice run up here. I wish I could make this more transparent or something. We have a nice run up here. This is the buying climax. Then we have some lower highs with multiple STs. Then we have an attempt. It didn't go higher above the buying climax, but that's normal. It doesn't matter. And now we have an UTAD attempt. And this reminds me a lot of the Bitcoin graph. So if this proves to be true, it kind of means recession, or at least stocks doing very poorly moving forward. I'm hoping we get it, but I'm a bear at heart. I will be a bull someday, but not now. Yeah. So thanks for watching. Just got back, so didn't have time to look at everything in detail. Hope this helps you guys. And until next time, have a good day. Bye bye.